basically your tenants, in a lot of case rentals, they don't have the best credit. They don't have high incomes, high end incomes. And so if you get into those luxury properties and you want to charge like what you would have to charge for it to be income generating, a lot of people wouldn't be able to afford that.
You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association.
All right, guys, welcome to the YMA Nation podcast, Real Estate Wednesday.
Real estate time, guys.
Real estate time. That need to be a new slogan. Real estate time.
Real estate time.
Real estate time. Thank you guys so much for joining us today. I am Joe Wallace, and this is
Rebecca Wallace.
If you are on right now, make sure you like, comment, and subscribe to the channel. We're trying to get to 3,000.
We are.
We will get to 3,000.
We are going to.
We are going to get to 3,000. Make sure you guys subscribe to the video and also share, because we're seeing people share the video too. So if you got Facebook, Instagram, make sure you share the video. Share our video, please. Down in the comment section, make sure you hashtag YMA Nation so you can go into our monthly cash drawing. Free cash. Everybody like free cash, right?
Yes.
And if you are on Instagram and Facebook, you can also follow our pages on our social media platforms, YMA Nation. Also on Facebook, on our YMA Nation page, if you like, comment, and subscribe, like, comment, and hashtag YMA Nation on Facebook, your name will go into the drawing each additional time. You like the video, your name goes into the drawing. You hashtag YMA Nation in the comment section, your name goes into the drawing. You share the video, your name goes into the drawing. So you have multiple chances to win free cash. Guys, let's get going. Let's talk about some real estate.
Yeah, so this is for our real estate investors.
Investors today. We're talking about you investors. I need to pay attention to this then. I need to pay attention. Okay.
So types of properties that you want to avoid. Investment properties that you want to avoid. Okay. This is going to help you determine whether you should invest, the types of properties to invest in, and what kind of to look for when you're being sent properties or going to look at properties in your area or outside of your area.
I can keep this short and sweet for you guys. Do not invest in a mud home. You probably seen those like in like foreign countries where they take mud and water and
all right.
And yeah, don't invest in a mud home.
Okay, thank you.
Yeah.
Thank you.
Hold on.
Okay, now for
give myself a round of applause for that. I just helped somebody save a ton of money.
We're gonna get into some real estate.
I helped somebody save a ton of money. All right, let's go.
All right. So, first and foremost, you do not want to get into real estate investments that do not generate rental income. So if you're looking at investing in properties, you want to make sure that those properties are going to generate some form of rental income for you. So what that means is you don't want to go and purchase like a $450,000 property if it's not going to be able to generate a high income for the rental property. And we're going to get into really delve into, it goes into the different aspects that you look at, but this is like the main thing is generating income.
Okay.
Making sure that the property generates income.
Can I jump in?
Yeah.
Because I'm thinking if I'm the viewer, my perspective may be that the higher the value of the home, the more I can charge for rent.
We're gonna get into that.
I know, but I want to make sure that they're expecting that.
Yeah, we're gonna get into that. The different aspects.
Okay.
So, but you want to have an agent that's gonna be able to guide you and let you know, hey, this is gonna generate you some income. That you're not getting into a property that you're not gonna be able to generate income off of.
Okay, I'll wait. If I don't jump too far ahead, I'll wait.
So, we're going to get into the next one, and then we're going to kind of go back into what you were saying on the generating income properties, okay? Because you don't want negative cash flow properties. So these are properties that are short term, going to be negative cash flow for you, but in the long term, you hope that they're going to become generating properties, money generating properties. So what that means is, let's say that you want to get into rental properties.
Okay.
And you find a home that is $125,000, right? But the home needs extensive repairs done before you're able to rent that property out.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did she say?
She said, "It's just a credit score, relax."
Are you checking your credit score?
Huh? Hold on.
Okay.
Unless you have a team, a contractor already, and a team that's going to be able to go in and do the work in a short period of time and turn that into generating income quickly, you don't want a property that you're going to have to hold on to for 6 months, a year, 2 years before it starts generating you any money. This also goes for people who say, well, I'm going to invest in this property, that invest in hold properties.
Mm-hmm.
This is true with like land, because you're hoping that the land value is going to eventually go up, appreciate,
right?
And you're going to be able to make a profit off of that land, right? But
if you're in the upstate of South Carolina, your land is going to appreciate.
It will, but it's the time that you're investing into that land
is important. Yeah,
is
timing.
important
Mm-hmm.
because you are essentially losing money on that investment until it does appreciate to a value that is going to generate that money back to you.
Right, that's going to be profitable for you.
Right.
Right.
But sometimes you do have to hold that property for an extensive period of time. So if you are especially new to investing, that may not be the smartest decision for you, because a lot of new investors don't have a lot of cash flow yet. They don't have that money to be sitting out there for an extended period of time and not getting that return back quickly. Fix and flips, you do that over a few months. You're able to fix it, flip it, sell it, get your money back out of it. So those are short-term generating money. If you want to get into the rental realm of it, then that's going to be your monthly generation of money. That's, you're going to gain that monthly income off of that property. Right. So we're going to go into some of the generated rental income. So overly luxurious real estate. So you have to think of it this way. If you get into a luxury property, whatever the luxury price point may be in your area, you have to think of the tenants that you're going to put in the properties. And a lot of times when you think of tenants, your tenants are going to be people who do not have the income to sustain what you would have to charge for a luxury rental for it to make sense.
Explain that.
So, basically, your tenants, in a lot of case, rentals, they don't have the best credit. They don't have high incomes, high-end incomes. And so if you get into those luxury properties and you want to charge like what you would have to charge for it to be income generating, a lot of people wouldn't be able to afford that. It wouldn't be affordable for what your normal tenant range is going to be. Normally, your tenants are going to be whatever your calculation is for whatever area you're in. So, of course, that ranges depending upon state, area. In the upstate of South Carolina, your rental ranges based on what city you're in.
Mm-hmm.
So what you're paying in Greenville County for rent, you may not pay in Lawrence County for rent,
Right.
right? Because the income variations are different in those counties. So the rental goes along with what the income variation is for that county.
So I'm trying to understand. So you're saying from a tenant, like, so what does this have to do with the actual tenant? You say you have to be careful as an investor.
I mean, you have to find a tenant to go into your rental.
Right, I get that part. So if I have a $600,000 home,
Right. So you want to charge, the rule of thumb is you want to charge 1% of what the value of the home is in rental, in your rent rate. So a $600,000 property times 1%, that means in order for most investors to want to invest in a property, they're going to want to charge the 1% rule, which is $6,000 in rent. That's not, I mean, that just doesn't make sense for someone to go into that type of property, because who's going to pay $6,000 of rent?
right? So the average,
even if you charged,
For
$4,000 in rent, who's going to pay $4,000 of rent?
so the purpose of this segment that you're talking about, the tenants, is as an investor you have to be careful on the type of property that may be too high or too expensive for the average person to rent, because now you're sitting on a property that's vacant.
That's vacant. You're not generating that income.
Right. So that property is vacant for 6 months. While you're waiting for someone to hopefully come along and rent that property, that's 6 months that you've paid on that mortgage.
Right.
Okay. I was just trying to see where it was going when you brought up the tenants. I was trying to see where it was going, but now I understand. As an investor, the type of tenants, when you look at, say, the median income for your area, so if a family median income is $45,000 a year, then $4,000, not going to be able to pay $4,000 per month on rent.
Right.
Well, I would say if you can afford it, the good thing about it, if you can afford it as an investor, the money that you are paying on that mortgage, then it's still going towards the principal. Part of that's going toward the principal. But why wouldn't you want someone to be paying that for you?
So that leads into the next little tidbit.
I'm leading into I'm leading into each section.
Investments you can afford. So most investors are going to want something that they can go into, and you want to generate income immediately.
Right.
You want to close on that property. You want to either, if you're going to manage the property yourself, or get a property management team to manage that property for you.
PMI.
You want them to get that tenant in the property, and you want the rent to start immediately. You want that cash flow to start for that property immediately.
Can we plug PMI real quick?
Go ahead.
No, go ahead. It's your show today.
PMI Southern States, you have the information though, like.
Yeah, PMI Southern States. If you are investing and you are looking for a good company to manage your properties, PMI Southern States. I'm going to pull up the information. Their contact info is 864-688 9281 PMISouthernstates.com.
There you go. And they can help anywhere. But you want to get into investments that you can afford. A lot of people that are getting into investments probably already own their own property, their own home. So you want to make sure that you are in a position where you can maintain that mortgage on your investment property if anything were to happen and you didn't have tenants, because you're still going to be responsible. So you want to make sure that you're in a place to where that investment property is affordable to you.
Right.
Because you're responsible for the maintenance, you're responsible for repairs. So, you don't want to get into, that goes back to like get into higher end properties. A lot of investors don't want to pay, $300,000 or $400,000 on a single family home. Now they may pay that like on a multifamily like unit to where, you have a quadplex or something like that where you have multiple units in there. That's a whole different thing. But if you're just getting into single family homes, rentals, you want to stay in a place to where you're comfortable in paying that, even if you don't have a tenant, worst case scenario.
That's important right there.
Right.
That statement right there.
And making sure that you're going to be able to charge the rent that is actually going to be profitable to you in that property.
What about as an investor obtaining a luxury apartment? Because a lot of people that do purchase these luxury apartments with the intent to rent, they like use those properties for like Airbnb.
I think that's a little bit different.
A whole different subject, right?
That's not like really investing for like rental property. And you have to be careful too, especially with like the Airbnb side now, because there are a lot of properties that have like kind of went away from allowing people to Airbnb within the properties. Maybe not
especially
so much
subdivisions.
Yeah, especially subdivisions. So you want to be sure when you're investing that you're kind of understanding what's allowed in that area.
The
HOAs, stuff like that, to make sure that when you invest, you're going to be able to do what you want to with the property, right, in a way that's still going to be generating you income. And even with Airbnb, that's high risk too, because the house could still be sitting, unless it's a time of year where people are coming into where you are.
So the location is important with Airbnb.
Right. So there's a whole lot more like research and data search that goes into wanting to get into Airbnb. The main thing is start out with something that's going to generate you some income immediately. And then if you want to venture out into those other types of properties in other areas. Now, I've heard different things about, these communities that are coming up, like the tiny house communities and stuff like that, and they are able to Airbnb, and people are saying those are really popular in some areas now, and they're able to make money off of them. But do your research and get with an agent in that area that's going to be your local expert and help you to understand what's going on in that area, what the rental rates are in that area, the price point of the houses that you should be able to get into that's going to help you generate that income.
All right. What a show.
Yeah.
What a show. Investing, guys. We cover everything.
Yeah.
Everything. If I was not hosting this show, I would watch this show like every Monday, Wednesday, and Friday. Well, yeah, I'll probably watch it just to see what they're talking about the Miami Hurricanes.
Yeah.
Let me see what they're talking about my team. I'll be all in the comment section.
Yep. And for your real estate questions, you can call 864-249-1437. That's the Pyramid Group at Keller Williams.
Can you provide them with that contact again?
864-249-1437.
And that's the Pyramid Group with Keller Williams, guys.
Yep.
So for all your questions in regards to real estate, if you have any questions, you can also leave any of your questions down into the comment section. Anything, any feedback that you guys have, from the show today, make sure you leave it down in the comment section, and we'll see you guys on Friday for Sports Talk Friday.
Sports Talk Friday.
Yeah.
Boss's view. You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association.